Good morning. Thanks for your company for the Morning Bell. Well, first up, the British Parliament will vote in a general election in December for the first time since 1923. The bill still needs the tick of approval by the Lords before becoming law, but it's great news for the UK PM Boris Johnson, who hopes the election will give him a fresh mandate for his Brexit deal to break the parliamentary deadlock, which of course led to the UK's extension for the Brexit, with UK's departure now being delayed again to the 31st of January. Earlier in Europe, we saw the largest stocks, or the Stoxx 600, fall 0.2% after scaling to a 21-month high in the prior session. The oil and gas sector copped a bit of selling, down almost 1%, dragged down by the heavyweight BP, which reported a sharp fall in third quarter profits. Last night over in the US, meantime, the S&P 500 hit a new all-time high but closed virtually flat, along with the Dow Jones as well, as investors await the US Fed Reserve's expected 0.25% rate cut. And if rates are cut, as the market expects, it'll be the third rate cut this year. In terms of earnings overnight, what did we see? Well, Merck shares rose 2.5% on their earnings, beating market expectations, boosted by their immunotherapy drug called Keytruda. Pfizer, another health major, their shares also rose by the same amount, 2.5%, on stronger than expected results, while not so strong for Google parent Alphabet. Their shares went the other way, falling 2% on disappointing earnings expectations, while the Nasdaq ended 0.6% lower because of that drop. So what to watch today? Well, the futures are suggesting that we will open lower today, falling 23 points. That's if you go by the futures, or a drop of 0.3% is on the cards, and that should see us scale back from the month high that we hit yesterday after we rose for 7 straight trading days. Lithium stocks are already expected to rally up again as protests in Chile continue, which is why we're seeing buyers mount into the likes of Orocobre, and their shares are expected to open higher. In the US, of course, if rates are cut, traders are expecting the market to rally here, and of course overseas as well, really drawing comparisons to what we saw in the 1990s, where we saw the Fed slash rates 3 times, a total of 75 points, or 0.75%, across 1995 to 1996 and 1998, and those cuts across those periods successfully prolonged expansion. That, of course, saw the S&P 500 and the Dow rise over 20% each on average after the first year of cuts. So that saw the Nasdaq rise 39% as well. So it'll be interesting to see if history does repeat itself indeed. What is on the cards for today in particular? Inflationary data, a key reading, is out, so all eyes will be on the ABS stats, which are due to hit the market at 11:30. We're expecting inflation to rise to 1.7% from 1.6%, and that of course is good news if we do reach that, because it's closer to the RBA's target of 2.5%. AGMs today, what can we expect? Well, Dexus, Myer, NIB and Zip are holding their AGMs, to name a few. All eyes will also be on Woolworths for first quarter sales and Janus Henderson's third quarter earnings as well. Happy trading. I'll see you when the markets are closed. Have a great day.